Good evening. Thank you for joining us for this webinar on budget and record keeping. This is the Niagara Small Business Development Center's Entrepreneur Series Class 3. Your presenter is Niagara SBDC Director Lynn Oswald. I am your moderator, Renee Goodnow from the New York SBDC. We're going to have a few points in the presentation to break for questions. If you have any other questions throughout the presentation, please don't hesitate to type those into your questions box. If we have any technical problems come up, if I cannot support you, I'm going to put the GoToWebinar support website in your chat right now, so you can reference that. I also want to mention the next webinar coming up is on 4/15. It's marketing for small business. And I'll also put the registration link for that in your chat box in case you need to register for that one. And with that, I'm going to hand things over to you, Lynn.
Thank you, Renee. Welcome, everyone. This is Lynn Oswald. I'm the director of the Small Business Development Center, and I'm so happy to have you join our series. If you've been part of the group, you've already enjoyed the entrepreneurship and the social media. Those are the fun ones. Tonight is a little more of a eat your vegetables and exercise regularly kind of thing. This is what's going to keep your business healthy. So hang in there tonight. I'm going to throw a lot of information at you. The slides will be available afterwards. I'm not trying to turn you into a CPA or give you an entire accounting course in one evening, but I do want to give you tools. I do want to make you an informed consumer so that when you are looking at your business, looking at your numbers, you have an idea of what the terminology means, what people are talking about. So the Niagara SBDC, if you've already been part of the program, Maureen already has done a great job of talking about us. So just a refresher for anyone who's new to our call, to our webinar series. Of course, we're here to help with disasters right now. That's a key part of what we're doing, but we still are talking to people about basic startup questions, putting a business plan together, finding your normal sources of funding in addition to the disaster funding. We love to talk about e-commerce, social media, marketing, whatever it is that you need, we're there to try to answer those questions for you. Our service is completely free and it is completely confidential. Normally we do this series face-to-face and everybody is from our region, but because we get to now do this webinar, I'm hoping we have some people from across the state on the webinar. If you are, there is an SBDC near you, and I will have contact information for the entire state of New York. So I'm your presenter. I love talking numbers. I'm not a CPA. I won't answer any specific tax questions. My goal is to get you organized and get you to really love your numbers. You really don't know how your business is doing unless you love your numbers. So I've been doing this for a while. I've had some really good years, and the program's been very good to me, so I do my best to give back to my community in every way that I can. My contact information is here. You're welcome to reach out to me. But again, if you're calling from another part or you're joining from another part of the state, please reach out to an SBDC near you. They'll know more about the local resource sources specific to your area. All right, so here's a quick quiz for you. If everybody can put their hands up and tell me how many of you are already in business? All right, I'm seeing about half. Yeah, that's wonderful. So for those of you who are in business, I hope these are questions you ask yourself regularly. If you are still in the planning stage, I hope these are questions you're comfortable with after you've been in business 6 months to a year. And I'm hoping at the end of this presentation, if any of these questions are stumping you or uncomfortable for you, when you get the PowerPoint, you're going to go back to this slide and you're going to look at these questions and say, oh, I know what a profit and loss is. I know how to gather information for my tax returns. I know how to track my inventory and so on. So I'm really hoping these questions will just not scare the heck out of you, but kind of help you see if you're prepared. And if you ace all of these questions, I hope you'll hang in with us, because I'll be able to still give you some good tools to maybe make your process a little more efficient. All right, so the next question I have for all of you, Well, before I go into that topic, how many of you went into business because you couldn't wait to go home every night and take care of record keeping? Do I have any hands up on people who love to do record keeping?
You have 2.
Two.
Oh, 3.
Awesome. I love it. Love it. Love it. I know most of you go into business because you love what you do. You love to cut hair. You love to design things. You're an artist. You're an engineer. You love to do what you do. You didn't go into this because you wanted to sit home at the end of a long day and do record keeping. But it is very, very important, and I can't stress that enough. I will mention disaster planning a little bit throughout this, because keeping your records up to date is going to be very important for these programs. But if you have very specific disaster program questions, if we can hold those questions to the end, I'll try to cover those the best I can. But we will have periodic breaks for questions if you want to type them in, and Renee will help me as we get to those breaks. All right, so I'm starting with a not so nice topic. Why do businesses fail? Nobody wants to think about this. And I don't know that I agree with the statistics, because there's really no agency that actually measures very well businesses closing. Sometimes businesses close for reasons that are just personal. The person retires, the person found a job that they liked, the person lost their lease. When a business fails, that means that it is broken down financially. It can no longer pay a lease. It can no longer pay vendors. It's not making enough money for the owner. That's a failure. And that's what the top one is. Math just doesn't work. Next week, when you talk marketing, Maureen is going to spend some time on pricing. Those of you who are not in business yet, think about that pricing very carefully before you start. People like to start with that low price, get into the market. Well, it's very hard to raise your prices later. And those of you who are in business know that it's not easy to raise your prices. Customers push back that you've got competition that doesn't let you just charge whatever you want. But making sure the math works, that's something we like to do with people very early on. I know the second one isn't anyone on this call. I know you're not the problem, but we do have to say we work with some clients that can be stubborn. They don't listen to advice. They don't seek out professional assistance through an accountant. But you're on this webinar, so I know you're not in that group. Believe it or not, growing too quickly can be an issue. We've heard businesses that ramped up so quickly that they were burdened by debt, or they had bad customer reviews because they couldn't keep up and things fell apart. So actually planning your growth is important. And then lax accounting. I'm going to preach this so many times tonight. You got to have this information handy. It's got to be accessible. And just get on my soapbox for a minute. Personally, how are you doing with your finances? Do you know your credit score and why it matters? Do you know what interest rates you're paying on your credit cards? Do you even know how many credit cards you have? Do you sometimes have late fees because you forget about something, or you just didn't get around to it, or you're just scrambling to pay the bills? I had one client who had a business. The year he got shut down, and he got shut down by the tax department, his gross sales were $250,000. But he could never handle cash flow, and in 1 year he had $20,000 in late fees and overdraft charges. So yeah, having sales wasn't his problem. Running the business was his problem. So are you scrambling to pay bills? And then do you pay bills too quickly? Sometimes it is better to time when you have money coming in and time when you pay those bills, especially if you've been given 20, 30 days to pay the bill. Don't ever pay it late, but maybe you can postpone a bill a little bit to wait for some cash flow. So timing is critical. Do you only pay the credit card minimum? Are you trying to live off the credit cards, whether it's personally or business? I have so many clients that want to start quickly. They ramp it up on credit cards, and then they think later, once they have a business history, that a bank will give them a loan to pay off the credit cards. Well, banks don't want to refinance old debt. So they're just not going to be real thrilled with you charging up a bunch of credit cards to get the business up and running because you didn't want to plan far enough ahead to work with the bank for a business loan. They don't want to be late to the table. Bring them to the table early. It's never too early to plan for retirement, even for those of you who are self-employed. I know that it can seem a struggle to just pay the everyday bills, but think about retirement no matter when or where you are in your business growth. And then cash reserves. Right now, who's going to survive this economic crisis we're in right now? It's going to be the businesses that have some cash reserves. It's going to be the people that have personal emergency funds. Waiting for the government to get around to their programs, it takes time. They're trying to develop things overnight, and businesses are finding out that this is not going to be a quick and easy resolution. So having cash reserves, if we learn nothing from what we're going through right now, it's got to be building cash reserves. Are your records organized? And then are they stored safely? I don't know if some of you are facing this now, but there's some records I wish that are in my office I wish I could get to. I wish everything was digital, but some things have to be locked up in file cabinets still. So how do you back these things up? How do you get to them when you can't get to the office? If your laptop was stolen, where would all of your information be? Something you should always think about. And whether you are, those of you who are in the startup mode, some of you who are in the early business mode, some of you may be looking at expansions, you should always be looking at the finances every time you're taking a new step, a major step. Keep the personal finances in order. Make sure you know how you're going to pay those personal bills while the business grows. If we were all together, I'm sure some of our experienced business owners could tell the new ones that you might not pull cash out of your business for 6 months to a year. Every penny you make typically goes back into the business. There's always something new, some expansion, some other piece of equipment, new marketing, whatever it is you want to do, the money keeps going back into the business the first 6 months to the year. So how would you pay your personal bills? And that can happen again when you expand, you open that second location, or you add a new product line or a new service line. That can definitely happen again where you may not be able to draw money out of the business right now. And sadly, we're seeing that with this economic crisis. Business owners just not able to pull cash out of their business like they normally expect to. Those of you who are in the startup, let's sit down and talk with us and help you plan how much. We actually have some good worksheets that can walk you through how much will it take to get started. Those of you thinking expansion, how much will it take to get this expansion done quickly and effectively? The banks want to be brought in early. Banks don't want to wait till you're halfway through, run out of money, and then go to the bank and say, hey, I'm halfway through this project, I need your help. They want to be in very, very early on. And then always know the cash flow impact of all of your major business decisions. You're all in very different businesses. You're going to have different cash flow issues. A restaurant gets cash in the door more quickly than a consulting service that bills and waits 30 to 60 days to get paid. So cash flow is always very important to think about, and it's very important to think about in your business, in your industry. So from a practical side, who's going to look at this stuff? Well, your accountants. I hope you're seeing your accountants. Those of you who are in business, I hope you're seeing your accountants 4 times a year at least, and then at tax time. And I tell you, the accountants are really coming through right now. I've talked to a few accountants that are really helping their clients prepare for this process to try to seek the loans from the SBA. And they really, if you have a good relationship with your accountant, can really go far. Your employees, you may not want them to see anything. You may want certain employees to only see certain things. So making sure that whether it's a physical system or a QuickBooks setup, point of sale kind of setup, making sure that employees see only what they need to see. Some of you may have business partners. You should always be very transparent, and you should both, or all of you, if there's more than 2, if all of you should be very involved in the record keeping. Don't leave it to one partner to rely on to do all of that stuff because you don't like it. You are responsible, and you do need to be very engaged. Spouse, significant other, they often get stuck with the record keeping side of it. That's always pretty funny to me when I sit down with a couple, and it's usually the significant other that's stuck with doing the record keeping while the other partner is out doing the fun stuff, the work, the revenue, the meeting with the customers, and so on. The kind of records that you keep forever, and I tend to keep everything forever. Business certificate, that's whether it's your DBA, your LLC, your S Corp paperwork, whatever it is that you are, keep that. Those of you that have to collect sales tax, always keep that. And if you have a retail location, you would have that visibly posted. Those of you who need permits, I will have a little more information in a few minutes about permits. Always make sure those are handy in case someone asks. If you get an EIN number, keep track of that. If you're not sure what an EIN number is, it's basically like a Social Security tax number for your business. It represents your business. There's no charge to get one, and you go through irs.gov. We have resources on our website, and we can walk you through getting your EIN number. Keep receipts, keep titles. A lot of people like to digitally transfer this onto some virtual medium. I still keep the paper. I guess I'm old school. You could see by my photo, I'm old school. I still keep pieces of paper, but receipts nowadays tend to fade with the way the ink is. So it might be well worthwhile to somehow digitally scan, store, but making sure this is secure and backed up somewhere. Customer records. If you can't get to your office right now and you can't access your customer records, how are you trying to run a business from your home? That's definitely very important. And my kitty just decided to show up for the webinar. So if you hear her in the background, she's 20 years old, so she does what she wants. Customer records, and then vendor supplier records. You always want to be able to, those suppliers, they take good care of you. They get you the product that you need when you need it. You don't ever want to lose that information. You want to keep that current. And then again, just some basics. Those of you who still get canceled checks and bank statements, hold on to that. Again, the receipts, the invoices. If you keep a check register, hold on to that. The date book is actually very good backup. So whether you still keep a paper calendar, paper date book, or you completely have got, you're on Outlook, make sure that you're archiving past date books. If the IRS ever has a question about, say, your travel log or an entertainment expense or even a conference you went to, you always have those dates in your date book, and that helps back up that you actually did go there, because most people, if they're going to forge things, they're not going to go to the length of actually forging the date book. So keep those date books, whether they're physical or virtual. Travel logs, we won't have a lot of time tonight to talk about business use of car, but if you do have some specific questions on that, I can always send you some information. The IRS has a book on travel and entertainment that goes into great length. If you ever have trouble sleeping, pull up some of those IRS publications, and within 10 minutes of reading, you will be sleeping well. And then the inventory records. Can I have a show of hands of how many of you actually have inventory? Not too many. Okay, so I won't spend a lot of time on inventory tonight. I do have about 3 or 4 slides I'll go through quickly. I do want you to have that information though, because even if you don't have inventory now, a lot of people change their business model down the road. You could start out, a veterinarian may start out just doing services, and then within a few years is selling food and leashes and beds and all kinds of product as well. So those of you who are in the service industry, keep the information handy in case you do decide to add some product to your business model. All right, so that's just kind of a brief intro of some of the more mundane pieces and the practical side of it. Does anybody have any questions so far?
We do have a couple of questions. Are you going to be able to send the slides out, or do folks need to request them from you?
Renee, if I turn it into a PDF, you can shoot it out to all the people, right?
Yep, we can
Yep,
send
okay.
that in a follow-up email.
Yeah, just give us a couple of days. We're pretty backloaded with a lot of things right now, and Renee has been running webinars for us across the state.
Yes, that's why my voice sounds like this, so I apologize. This person has a question. If they have bad credit, should they not apply for grants?
Okay, we're not going to talk a lot about grants tonight. Be very careful when you see anything online about grants. There's a lot of scams. Grants are usually very specific and very geographic. So that's where you talk to your local SBDC, see if they know of any regional grants. As far as going for a loan, do repair your credit. There are local agencies, there are some very safe resources. You have to improve your credit for a bank to work with you. Typically, a bank wants you to be at 650 or higher.
Thank you. What's the difference between a tax certification number and EIN?
VIN.
EIN, sorry.
Oh, oh, I'm sorry. An EIN is an employee identification number. That's just a tax number for the business. A tax certificate, are you meaning your sales tax? That's completely different. And we will spend a little time on sales tax coming up, but not everybody charges sales tax, but we will spend a little time on that. Those are two very separate. EIN is a federal tax number used to identify your business, and sales tax certificate gives you the authority in the state of New York to collect sales tax.
Great, thank you. This person owns a hot dog cart and they're wondering how QuickBooks would work for them.
I have a slide coming up that also has a few other and has a link, and I forgot to check the link. The last time I looked at the link, it was still good. It goes through a review of online sources because it talks about not only the business type, but how you like to track your information. So if you want everything on your phone, there might be some services that are better than QuickBooks. A lot of people use QuickBooks because that's what their accountants are comfortable with. So before you go and look at some of the other type of softwares, make sure that your accountant is able to look at it. For a one location business, I'm sure it will work good. There are some fancier POS systems that are specifically for food related businesses that you can look into. But I think to get started, QuickBooks probably would do the job.
Thank you. How do you get your business credit score?
You get a D&B number. There's a DUNS number. There's no charge to get that. I don't really go into those kind of details in this program, so I don't have that link on here. But if you just Google DUNS number and make sure you are on the Dun & Bradstreet website, there's a button where you can click to get your DUNS number and then start your business credit history.
Thank you. And I'll try to pull up that website and put that in the chat for folks.
Oh, great. Thank you.
No problem.
Yeah, there's no charge to get a DUNS number. So if somebody's trying to charge you, you're on the wrong website.
Great. And this person says they'll be driving their car a lot, so they're looking forward to you covering that a little bit.
I will, I was going through the slides today. That's something I usually do live in person because it's a little easier to demonstrate. If this person will remind me at the end, if I haven't gone into some detail, definitely remind me and I will try to at least give a very brief overview of keeping a travel log.
Great, thank you. I think that was the last question.
All right, then let's keep going. You guys are asking good questions. All right, so why keep? I hope this is pretty self-evident. We don't want any of you to go through a tax audit, but if you did, if you have good records, they're survivable. The IRS doesn't want to not let you take deductions. They just want you to back up what you say. Your accountant will charge you less if you're organized. They do tend to charge by the hour. You can make better decisions about your future, and the banks can make better decisions about your future and your value. And for those of you who are building a business because you would love to sell it someday and go retire to a Caribbean island, you're not going to be able to sell the business for what it's worth if the numbers aren't accurate. I can't tell you the number of clients we've had try to buy businesses, and the business owner is like, well, you know, I don't report everything to the IRS. Well, guess what? The bank's only going to look at what you report to the IRS. So who can buy your business if it's not making any money and it doesn't look like it has any value? And nowadays, it's so much easier for the tax department to cross-reference what they think your revenues will be. And if they think you're underreporting, they'll go talk to your suppliers, they'll go talk to your landlord, they'll sit in your business and see how many customers show up. So you don't want to go there. It's just so much easier. Not that I'm a goody two shoes, but it's just so much easier to keep everything above board, report everything. Like right now, businesses that are trying to tell the SBA they deserve a disaster loan and can't prove that they actually have revenues of any size because they do everything off the books, when they pay their employees off the books, they're not going to get any disaster recovery because they don't exist. If it's not on paper, if it's not reported to the government, it doesn't exist. Having a separate bank account, just again, some of the practical things. Those of you who are in business, I hope you are already doing this. Keep your personal and business separate. If you have incorporated and you mingle your money, it will break that liability shield you worked so hard to create when you became an LLC or an S Corp. Always stay on top of those bank statements. And then for the New York State sales tax, for those of you who do collect sales tax or will collect sales tax, they would like you to have a separate account. They don't require you, they don't force you, but they do really like it. That's a direct quote from their website. If you feel your bank is charging you too much to have a couple of business accounts, do try your credit union. A lot of credit unions are doing business accounts and they can be quite affordable. Do you want to accept credit cards? It's almost a no-brainer nowadays. It's very hard to conduct business depending on the age group of your customers. If they're my age and they're over, I won't say how old I am, but you know, older customers might still use cash. But if you're completely online, or if you're selling to those who are 30 and under, they don't carry cash. So you have to know credit cards, the process, the risk, find a good merchant service. If you don't know who to use, talk to other business owners that you know, look what's used in your industry. It just amazes me now when I go to even an art show and a person can just whip out their Square and take your credit card right there. You'll make a spontaneous purchase that you wouldn't normally do, but it's great for the business. So always looking at credit cards and how they will help your business grow. And this is your customer using a credit card. This is not you starting a business on a credit card. I know I said that earlier, can't say it enough. Do not start your business using credit cards. This is for your customer to do business with you. And just a few other things. We're going to focus tonight on numbers, but when I think record keeping, I think of every piece of your business. How will people get back to you? I'm dealing with more voice messages and emails than I've ever dealt with. The volume is unbelievable, and trying to make sure that I get back to people and honor their questions and in a timely manner, it really can make or break your reputation. So how will you track that information? If someone's sending you an email, well, how quickly can you get back to them? If they're on your website or your Facebook page and they're interacting with you, how many different ways can they interact with you right now? It's truly amazing what the number of connections that you can make. How will you track the order? Did you fill the order? Did you ship the order? How many billable hours might be tied to it for those of you who provide a service? Have you billed? Did the customer pay? Who sent you referrals? I always track who sends me referrals and send them a thank you note. Real quick email. Oh, thank you for sending so-and-so to me. I appreciate that. Little things like that can make a big difference. And then if you have employee records, we will have an HR program I think that one's in 2 weeks on the 22nd. and she will go into some detail because there's certain records that can't be filed with other records. There's some really weird rules on employee records, and they certainly have to be locked up with only you having access to them, or very specific people having access to them. So those are some very basic record keeping items to also keep in mind. I tell you, one of my biggest pet peeves, and when I work with small businesses, is when they're not responsive. If I like someone who painted my house and I refer them to one of my friends, and my friends call, and then I find out later that the painter never returned their call, I won't refer them again. I think being responsive is important. So it'll tell you how professional you look. It has to be accurate, consistent, and reliable. The IRS does not force you to use any specific online system, any specific tax software, any specific POS. They just want you to be consistent and do it the same way or nearly the same way every year, and to follow the rules and to keep everybody happy. So as I said earlier, I'm not a CPA. We don't answer specific tax questions, but I did want to give you some very safe tax resources. So there's the IRS, obviously, that's where you can get your EIN number. They have some videos that are actually pretty good. They're quick and very short topics, so it's a quick and easy questions. Publication 583, that's one of those publications I told you will help you sleep better, but it does have some really good startup and record keeping stuff. Then I have the New York State Tax Department. And I mentioned earlier, for those of you who are local, that here is our website, the niagarasbdc.org. And then the Facebook page, we have been focusing usually we like to use Facebook to talk about fun things and to post our clients. And now we're doing it all for the crisis. So we are posting all disaster information. We try to keep all of the links very up to date, and we always try to stick to very, very reliable sources. And then those of you who need permits, if you're not sure, call the New York State Permit Department. I don't know how many people are working in that department right now, because I think the state has shifted many, many employees over to the Department of Labor. But they do have a phone number people will answer. They also have a wizard that you can go through at express.newyork.gov. You type in the kind of business, you answer some questions, and they will let you know the permits you need. Not all are at the state level. For the trades, you might need to look at your local. If you're a plumber, then your local cities and towns may require you to have a permit in each of the towns. And then for food service, you definitely want to be in touch with your county health department. All right, that was a quick little section, but just kind of some maintenance stuff. Any quick questions there?
We do, and I'm also sending out the links that you just mentioned. So everyone just give me a second to get the rest of those out. Can you tell us about any credit card swipers that you could recommend for mobile phones?
Oh gosh, it just seems Square has kind of taken over the market. I'm not really familiar with any others. That's where it's always great to talk to other business owners that you know, and if you go to an event and you see someone whip out their phone, ask them what they're using, ask them questions. But yeah, that tends to be, it ties directly to QuickBooks, and it's kind of taken over the market.
Thank you. Is there a record keeping book to help you keep up with your records for sale? And is PayPal a good way to receive money? And can I?
Well, PayPal is definitely a safe resource. With any of them, you just have to compare what the fees are. Usually they're charging you a per transaction fee. There might be a flat rate month fee, and then there might also be a percentage of the sale fee. So you have to look at the fee structure and look at your volume of transactions. Somebody may sell only a few items each month, but they're very expensive. They don't mind the transaction fee, but they don't want a high percentage fee. Whereas another person who sells $2 cups of coffee and sells a ton of them doesn't want to have a high transaction fee, but doesn't care so much about the percent as much because their average sale is $2, $3. I hope that makes sense, but they're not apples to apples. They definitely have to look at how many transactions, your volume of transactions, at the size of your transactions to kind of look at their credit, how their fees are structured to see which works best for you.
Thank you. And sorry, I trailed off there on the end. I didn't understand the last part of their question, so I asked them to clarify. So I'll get back to you on that one.
Okay.
Someone mentioned there's a new one called PayPal here. And then there was a question, could you use an app, a Cash App instead of Square?
I don't like to get into recommending any one product or service because there's always something new out there, and because it really just depends on how you interact with your customers. Is it on a phone? Is it on a tablet? Are you in a location? Are you mobile? How secure is, are you sending this information over public Wi-Fi? I mean, it's just going to be so different for each of you that I usually don't get into those kind of specifics. But that's again where, if you're in any kind of trade groups, marketing groups, chambers, any kind of networking, whether it's physical or virtual that you're doing, those are great questions to ask. What are you using? Do you like it? Would you recommend it?
Thank you. And I think they were asking specifically for in-person transactions. They wanted to clarify on that.
Yeah, and that'll depend on whether you're using a point of sale. A lot of restaurants now, especially the food industry, they like to use point of sale because it tracks the sales, it tracks the order, it tracks the inventory, it tracks all kinds of things. And those usually have the merchant services built in.
Great. I think that was the last question.
Great. All right. So let's get into the numbers. Let's get down deep in the numbers. And I created this slide because I really wanted you to see the difference between being an employee for someone and being an owner. Now, if you'll notice, the net income for both of these individuals is $10,000. The employee showed up, went to work for a certain number of hours, and they earned $10,000. In this situation, the owner had to have gross receipts of $20,000. He paid $2,000 for the items that he sold. So this one has a product involved. If you're a service business, you would skip that section. And then for the month, they had $8,000 in expenses. They got to that same point, but the way they got there is obviously very different than going in 9 to 5 and working a normal job. But it changes after that. So I just came up with an rough estimate of their state and federal taxes. They're paying the same tax rates, but they're not going to pay the same FICA and self-employment. So when you work for someone, you have seen something on your pay stub called FICA for Social Security and Medicare. You're paying, you're paying 7.5%. What you may not realize is that your employer also contributes 7.5%. So a full 15% goes into the system. Well, the employee only pays half of that, but an owner pays both sides of it. So when you see something called the self-employment tax, don't think that you're being charged something new because you started a business. It's the same FICA that every employee pays. You're just paying both parts of it. So even though these businesses had the same net income, the income remaining for them is different. And that's something to be very aware of as you're pricing your product, especially people in the service industry. They'll say, oh, well, when I provided this service, I made X amount per hour, so I guess I'll charge a little more than that. You really have to walk almost backwards through the numbers and say, boy, if I want to stay at least at the same net income where I was after taxes, what do I have to earn? How many hours, billable hours, do I have to get to? How many product sales do I have to have? And that's assuming that you're keeping good track of your expense records and keeping them in order. But this is just one quick way of saying it's not equal. What you earn as an employee and what you earn as an owner, it's a different process. And look at who's responsible for the records. When you're an employee, your employer keeps all the records. They submit the payroll taxes. They submit the FICA into the government agencies. And then the employee just files a tax return. But the owner is responsible for everything. They have to keep all the records. They have to submit all the taxes, and they have to file quarterly estimates and then an annual return. So definitely, I'm hoping you see right away the owner has so much more responsibility than when you are just an employee. So how can you track the numbers? Again, this is just the same thing I had on the previous page. How do we know that they had 20,000 in sales? How do we know cost of goods sold was 2,000 and expenses were 8? How quickly, it's April 8th, how quickly would you know how your business did in March? I think you should know by March 10th, March 15th, how you, you should know by the 10th or 15th of the following month how you did. And you should be able to compare month to month and then year to year, because it's that history that really lets you see that you're making some progress. And it should be exciting. Should be seeing growth that you've been working so hard for. You should see the sales being going up because you've done such great social media marketing and some other marketing strategies. You can't track any of that if you don't know the numbers. So I'm going to take a few minutes and do some accounting terminology. Assets, that's your business property. Liabilities, that's when you owe somebody money. And then owner equity is your piece of the pie. When you start a business, you need to also put some skin in the game. You need to bring some money to the table. So if you're going to go to a bank loan to start your business, they're going to look at what assets can you bring to the table, how much cash, owner equity, can you bring to the table, and then how much are you going to borrow. And those of you who are in business, this comes up every time you want to seek a loan to expand or buy a new piece of equipment. You're always going to be looking at what are our assets, what are our liabilities, and how much skin do we have in the game. So if you ever want to dazzle people at parties, you can tell them the accounting equation: assets equals liabilities plus owner equity. And I'm going to try to cram some terminology in this real quick. This is stuff that if you were taking accounting over a semester, you'd have 12 weeks to go through some of this. But it's still very important, and just to understand the correct use of the words can make it so much easier to have conversations with your banker and with your accountant. So what does this equation actually look like? Say you buy a truck, it costs 10,000, you borrow 6, you pay cash for 4. In this situation, who owns more of that truck? Do you own more of the truck? Or does the bank own more of the truck? I hope you see that right now the bank owns more of that truck than you do. But you do have some skin in the game. And most banks would be happy to lend you this kind of a ratio where you're bringing 40% of the value of the truck to the equation. Quick and easy. It's easy when it's one thing at a time, but those of you who are already in business and have many assets, maybe have a couple of debt, maybe have a commercial mortgage, you might owe some vendors some money, this equation can get complicated pretty quickly. But it always has to stay equal, and that's going to be your balance sheet. We're going to talk more about balance sheets on the 29th when I do find more of an in-depth financial workshop. Okay, keep up with the terms. Owner draw, that's how you pull money out of the business. Those of you who are sole proprietors, if you're an LLC, it might be a member draw. Different business structures, you pull money out different ways. Some of you will actually be on your own payroll. You'll be a W-2 employee. It's just going to be depending on how you set it up. Accounts receivable, that's when customers owe you money. So those of you who sell product or sell a service and then wait to get paid, you're setting up an accounts receivable. This does slow down when the money's going to get in your checkbook. So it's not easy to offer credit terms, especially when you're starting out. But if that's what's expected in your industry, that's what you have to do. A wedding photographer can't ask for their entire fee up front. They can only ask for a deposit. Even lawyers can't get all the money up front. So some of you, depending on your industry, it's going to be a fact of life. You're going to have accounts receivable. And then accounts payable is actually in your favor. That means that a vendor sends you food for your restaurant, product for your store, and you don't have to pay for it at point of delivery. You might have 20, 30 days to pay for these items. That can definitely help cash flow, because in the meantime, you hopefully are selling all of these items before you have to pay for them. However, those of you who are startups, this is a relationship you earn over time with your vendors, and most new restaurants, most new retail stores, they're going to have to pay cash on delivery. They're not going to be able to set up terms yet. And then again, get a little familiar with what an invoice is, what a purchase order is. I don't have time to sit here and go through every aspect of this, but people take some of these things for granted. Someone will send a purchase order to you, and you then have to decide, do I agree with what they're asking for? Because these are contracts. Or you are sending, you as the seller are sending an invoice to a customer. Make sure you really understand what goes into these documents. They're quick and easy to do. They're right usually in your Microsoft Word setup, or in your point of sale will have these, or your QuickBooks. But just because it's easy to make one of these doesn't mean you can't take it very seriously and look very carefully at what you are actually agreeing to when it comes to hours, rate, quantity, pricing, and so on. And then the good stuff, revenues. What is a revenue? A revenue is something from your normal business activity. If you are a hair salon and you cut the hair and you make money for doing that, that's a normal business activity. If you sell off an old chair you don't need anymore and you make 50 bucks on it, that's not a revenue. That's selling an asset. That's changing the asset of chair into the asset of cash. So don't mingle that kind of stuff in with your revenues. Also, as an owner, if you invest cash into your business, make sure that is clearly stated as a cash investment. You don't want the IRS to mistake $10,000 or $5,000 going into your checking account as a revenue when it was your investment in the business. So define all dollars that go into your business accounts. Expenses are the money you spent to make that money, and they have to be logical for your business. People ask all the time, and I, as I said, I don't go into taxes, but people will say, is this deductible? Is that deductible? And my answer is always, A, can you prove what you spent it on? Can you back it up? And B, is it logical for your business? If you buy a swing set for your daycare, it's logical for your business. So making sure that it makes sense. And I hope you're seeing the word at the top of the page, daily. I know this is a pipe dream. I know I don't stay on top of my own personal information daily. And I'm weekly, at the very least, weekly, be caught up. Make sure you're entering the revenues, you're tracking the expenses, you record if you've bought anything, if you've made any loan payments or taken on any new debt. Just do it regularly, timely, get into the habit. I believe when Maureen teaches social media, she talks about getting into the habit of posting things on social media. Same thing, this is a habit. Get into good habit of keeping up on your financial information. I mentioned that in a couple of weeks, 3 weeks, I'll be talking about financial statements. I'm just going to briefly talk about income statement tonight, because that's the one easiest, I think, for people to jump in with. And all it does show is your revenues and expenses. It's not going to show that chair that salon I said sold for 50 bucks. It's not going to show up here. It's not going to show the owner investment. This is only revenues coming in and true expenses going out. You create this monthly, and I did mention some computerized systems here, QuickBooks being first just because it is the most common. But there are some other ones out there, and you'll notice that FreshBooks has taken on some popularity, but that tends to be more for the phone. Xero for Mac. So again, look at what you're doing, what kind of equipment you're using, how you're going to access it, and just what works best for you. So here's a sample. It looks pretty easy when you just put it down on paper, 5,000 in revenue. Well, how did you track that 5,000? If you have a cash register, you can pull those numbers up off the cash register daily sales. If you have a point of sale system, you can pull that up. If you have if you're doing billable hours, you're a consulting service and you do billable hours, how do you track the billable hours to get to that revenue figure? And then the expense side, the same kind of thing. If you have payroll, you're using a payroll service, they can probably give you all of that information. You know what you paid on utilities, whether you're paying with checks or you're paying with an online banking. You should be able to pull that information up pretty quickly. And if you are using some kind of a QuickBooks or incorporated software, it should all be right there. And you just ask for an income statement and it's ready. But it is garbage in, garbage out. If you're not reporting the numbers accurately and you're not putting them in the right categories, then when you ask the system to create an income statement, it won't be accurate. It'll just do what it does with whatever information you gave it. So it is pretty important. All right. Any quick questions? And I said that we will be doing the income statement in much more depth. We will be doing cash flow and balance sheet on the 29th.
We do have some good questions. Can you go over self-employment tax?
Sure. So self-employment tax is that FICA. As I mentioned earlier, when I had that employee, I had this slide up. That is your FICA, your Social Security, your Medicare. So if you have worked for an employer, you see that on your pay stub. It comes in two pieces. When you see self-employment tax, it's simply you as the owner paying both of those pieces, both pieces of FICA.
Thank you. If it's set in quarterly, can it be done on a personal tax voucher if you're a sole proprietor or LLC?
Oh gosh, you guys are gonna ask me tough tax questions. I don't want to touch that one. And this is where it's a little frustrating because we've taken our in-person workshop into a webinar series. We normally do have a night with a tax accountant to answer these kinds of questions. We're not sure if we're going to be able to convert that one to a webinar because it is, the way she teaches is pretty interactive. And I don't think we're going to be back live in a classroom by then. So I'm going to have to sadly defer that one. I would reach out to your accountant on that one.
Thank you. This is another tax one, so you can definitely defer it, but I want to ask it just in case.
Okay.
Where do you log self-employment or other income taxes in your bookkeeping?
I'm sorry, what?
Where do you log self-employment or other income taxes in your bookkeeping? Are they expenses?
Oh no, they're obligations. So they're after net income. You're going to get down to your net income figure, and then you're going to figure out, based on your family situation, how much tax you would owe based on your tax bracket. You'll figure out the taxes on that net income. So it's an obligation. It's after net income. Some people, I know some people who work and they'll just set aside a certain amount, 30%, say, just to as a rough estimate. But in order to set it aside, you got to know your revenues, you got to know your expenses, but then setting it aside, holding it in reserve, then working with your accountant quarterly to send it in. And then you'll file at the end of the year, just like an employee would, and you'll either owe more money or you'll get a refund.
What is the benefit of doing a monthly income statement as opposed to a yearly?
Oh gosh, it just lets you compare month to month, especially in those early years. Hopefully you're growing exponentially, and to compare February to January to see how you got better. And then if you have some seasonality, after you've been in business for a while, you can compare February of 2020 to February of 2019. It just lets you see, it lets you compare yourself to yourself. And then there's also some benchmarking you can sometimes do within your industry to see what ratios you're hitting and so on. And we can also get you some of that information. There's something called the RMA guide that is by NAICS code, and it can tell you what your profit margin is typically in your industry, what the cost of goods sold is typically, what percentage of revenue typically goes to utilities. There's ways to benchmark as well, but I think the most powerful thing for a small business is just to compare yourself to yourself and to see your progression.
Thank you. And I missed this part when we were talking about point of sale. Can you go over a quick definition of POS?
It basically is a point of sale. It's a software system that you buy. They've come way down in price. They used to be outrageously expensive. A lot of them even now come with the hardware, the tablets. If you go into a restaurant nowadays, you'll see they're taking an order on a tablet and they're entering the order directly into the kitchen before they even leave your table. The drink order is already at the bar and the inventory has already been depleted for those items. And your bill is ready whenever they need to print it out. That's all done through a software, a point of sale software.
Great, thank you so much. Regarding not-for-profit businesses, how do you determine your salary?
Oh boy, not-for-profit. So we are a taxpayer-supported organization and we focus on helping businesses. I don't have a lot of background on a not-for-profit. I'd be real careful with that. Usually a not-for-profit, as far as I know, has to have a board of directors, and it's the board of directors that's deciding what your salary is going to be.
Great, that was the last one for this section.
Awesome, you guys asked good questions. All right, now let's get into, I actually taught accounting early in I loved being an adjunct faculty member, and I taught small business management for years. And I also taught accounting, and I love teaching accounting because I'm not a CPA. My degrees are in finance. CPAs tend to look at historical. Finance people look more forward, and they're very interconnected, but it's just a different way of looking at the numbers. So when I taught accounting, I thought it was fun because I focused on what can I do with this information as opposed to just this debit and credit. But I have to tell you, if I ran the world, everybody would take at least one semester of accounting in high school. I don't care if they're an athlete, an actor, an engineer, a plumber, I don't care what they do. Everybody should take a semester of accounting. One of the things that gets really complicated very quickly is accrual versus cash basis. And the reason I throw this in is, again, I want to make you an informed consumer. I want you to be familiar with this terminology. Most of you will be in a cash basis, and that will work fine for you. But some of you are already running businesses where you're doing kind of a mix, and you really need to sit down with your accountant and say, I think I'm supposed to be on the accrual method. How do I do this? So to try to introduce this topic, and this is basically an introduction. This is to get you talking to your accountant if you really aren't sure which one you should be in. This is just an intro to get that conversation going. So in a simple example, we have a lawn care business who earns $500 cutting grass in June and bills the customer. Their customer is a commercial customer, so they go and they cut that grass in June. They send the invoice. The customer sends the check in early July. And many of you may be in these kind of situations. You are providing a service and you don't get paid right away, and it may carry over into the next month or even 2 months down the road. Well, we're telling you, you have to create an income statement and report revenues. How do you do that what do you do with this $500? Well, under the accrual basis, you record it when you did the work. You did the work in June, so that's when you record it. Under cash basis, you got the cash in July, So that's when you are going to record the revenue. A lot of you are on cash basis. Your customers pay you right away. They swipe that credit card, boom, you're getting paid right away. Cash basis works fine for you. But if we have people on the phone that are delaying, they bill, they wait to get paid, they are in the accrual basis, and they're going to need to sit down and kind of figure out, how can I better track my revenue, and how does that look? So we have a side-by-side sample income statement. And I'm going to say that for all of the revenue, all of the other revenue for this business, it all came in the same month that it was earned. There's only the difference of this $500 that was done late in June and didn't come in July. Well, a business that's using cash basis is going to be on the left here. They're only reporting $4,500 in revenue. That $500 isn't in their account. They are not going to report it. They recorded both sides of this. Either way, we're charging the same expenses. We spent the same expense. You get down to that net income though, and there is a difference. Why do we care? Well, remember when I said you want to compare yourself to yourself? And if you're trying to compare June of this year to a typical June, it can sometimes get skewed when you have these kind of information carrying over from month to month. Just being consistent using the same method will help keep you comparing apples to apples. I guess that's the key here, is don't jump back and forth between bases. Whatever reporting basis you are using, whatever you've set up with your accountant, stay on that. And I have in the box at the bottom, remember the checkbook is the same in for both of these scenarios. That $500 is not in the checkbook. So income statement does not always match cash flow. And I will repeat that when we're on the 429 workshop. Income statement does not always match cash flow. And in this situation, the cash basis, they will match. The money's not in the bank book, it's not in the bank account, it's not here on the income statement. So if you're comfortable with cash basis, and many of you are probably already operating this way and don't even know it, just keep doing what you're doing. But the accrual basis, when there is a delay, is the more accurate way to go, because the revenue is based on when you earned it, when you did the work, when you used up the employees, when you did the work. So the revenue looks higher, but remember, the checkbook hasn't changed. Hope that makes sense. Let's look at it from the expense side. This example might show a little different, a little more clearly why you can get some skewed looking information. Same kind of thing, the accrual basis records the expense when it's incurred, and cash basis shows it when it actually left the checkbook. So here's a annual insurance bill. They pay $1,200 a year and they pay it in June. Under the accrual basis, you're only going to record 1 month of that expense because that's all you used up. That's why the accrual basis is more accurate, because you only used up 1 month. And if you cancel that insurance tomorrow, you would get back the remaining amount. It's prorated. Under cash basis, you show that you had a $1,200 expense. So when you now look at the two statements side by side, boy, does June look like it was terrible. Now, June does reflect the checkbook. So that is good, because you know that the checkbook is lower, that $1,200. But if you compare June to May, and you'll be like, wow, I thought we were busy in June, what happened? You might forget that, oh yeah, that insurance expense was in there. I'm hoping it's just cash basis. If you're comfortable, stay there. It reflects the checkbook. But the accrual basis more accurately reflects how that month looks. But you could get a false sense of security when you look at $3,200 as a net income and not also keeping an eye on the cash flow to know that that money isn't all there. That 500's missing and that 1200's gone. So you might have thought accountants were boring people, but they do some creative things. And I know the first time I saw this, when I took accounting for the first time, it kind of stunned me that you could look at the same information in two different ways. But these are both acceptable ways. You just have to make sure you know which one you're using and stay with it. A couple of you did say you have inventory, and because some of you may in the future have inventory, I do want to spend a few moments on it. Proper inventory levels is so key to running your business well. And many people have found a way to avoid this. If you're doing some drop shipping, you take the order on your website, you never actually touch the item. You have a third party, a warehouse, a distributor, somebody else literally ship the product to the customer. You've been able to avoid having to deal with inventory. And a lot more people are trying to go this method, but sometimes this can get disrupted. We're certainly seeing this right now. If you don't have inventory on hand for your business and you're still able to make sales, you may be missing out on sales because you just can't reorder easily right now. Your supply chains may be disrupted. So having the right amount of inventory on hand is never easy to predict. And it's quite an art. If you've ever gone into a restaurant and they run out of a popular food item, you know that's lost sales. If you've ever gone into the store and your favorite brand of toothpaste isn't there, many of us won't settle for something else. We'll go to another store and we'll go get our favorite brand. That's a lost sale. And having improper inventory can be costly. It also ties up your cash, and that can make it harder to do other things, to pay other bills. So having the right amount on hand is important. And I mentioned cost of goods sold earlier. That is the actual cost of the item, and I will go into retail and wholesale. I'll talk about this a little bit more. But if I bought a mug for 50 cents and I sell it in my gift shop for $5, the cost of goods sold for that mug is the 50 cents I paid for it. That gets recorded when you sell the item. When that mug is sitting in the inventory on my shelf or in my storeroom, it's inventory. So there is a difference. So those of you who have inventory, how will you keep an eye on it, protect it? Do you have to insure it? Does it have to be in climate control? Is it secure? Can you protect it from theft? How do you know when you're running out of something? How do you know how much you've actually sold and which products are selling the quickest? What time of year certain products are selling? Do people buy in combination? If they buy this product, they also buy that product. It's very important to know when you have a product mix, exactly how it sounds. How do they mix? And in the marketing, she'll talk a little bit about product mix, but always being very aware of who's buying what. We all go to our favorite store to get groceries. Not the easiest thing right now, but on a normal world, you go and get your groceries. Where do they keep the milk? And how much profit do you think they make on milk? Not very much. And they put it way in the back of the store so that you'll walk by the meats and the bakery shop and all of the more expensive, more profitable items before you go back and you get your milk. But they're not going to stop selling milk because it doesn't have much of a profit margin. That's what gets you in the store. So inventory is really tricky. I love talking inventory. We could spend all day on this, but just always keeping mindful of how much you should have and so on. Back to a few more. How quickly can you reorder? Are there minimum order sizes, discounts for buying in bulk? You certainly, if you're running a store selling phones, you don't want to have a year's supply of a phone because they're obsolete so quickly and the next model's coming out. But if you have vendors that aren't always reliable and it takes 6 months for shipping, I mean, you look at what's going on with Easter items now. Those poor stores probably ordered Easter items 6 months ago, and now they're trying to sell their chocolates and their decorations, and it's very difficult in today's climate. But those decisions, those inventory decisions were made months ago. I said I would mention pricing. People sometimes confuse how they use the word wholesale pricing very loosely. That is what you, the business, pays for the item that you're going to resell. For those of you who are reselling items, wholesale is what you paid for it, and retail is what you charge for it. And in a perfect world, you'd keep that retail price as high as you possibly can and that wholesale price as low as you possibly can. But most of you, I'm sure, are in very competitive marketplaces. You don't buy in the kind of volume that lets you get that really cheap wholesale pricing. So it's always an art form trying to get that margin, that gross profit margin between the retail and the wholesale as far apart as possible. And of course, you're going to record all of your revenues at your retail price, and then you record your inventory and your cost of goods sold at your wholesale price. All right, I know that little section had quite a bit to it, so let's see if we have any questions.
We do. How is petty cash handled at the end of the day, or is it handled weekly?
Oh gosh, again, that depends on the business. If you don't use it very much, weekly is probably fine. If you use it a lot, I guess you don't hear people talk about petty cash too often anymore because so many people just use a credit card for small purchases. I know that, boy, I'd have to think back on that. It's been a long time since I've been involved with anybody that used petty cash, but I know that what we would do is we would reconcile it like once a week. We'd add up the receipts to make sure that the balance plus the receipts equaled the normal level that we kept it at. And then we would replenish it with a transaction, and we would record those little receipts as expenses in whatever category they went in. I hope that helps. Boy, that's old. I haven't thought about petty cash in a long time.
Yeah, absolutely. And this is for the hot dog cart, so it makes sense. They're
Yeah,
also
yeah, I
curious.
could see that situation. You
Yeah,
don't want to lose those little receipts. You spend $3 here, $5 there, $10 there. That adds up at the end of the year. So petty cash for you would probably be very important. If you are spending a lot on little things every day, then do it daily, because those little expenses, you want to get them into a category, get those receipts recorded, so that by the end of the month, you haven't lost any little $1 here, $2 there kind of things.
absolutely. And this is a follow-up to that question. So with their hot dog cart, they were curious how to write off waste items like old product, and they're also curious about items like car washes that are cash only and they don't have receipts.
Okay, so the food and food is a tough one. If you make a mistake in food and something gets thrown out, it wasn't prepared, it was burned, it was old. When you throw that stuff out, your inventory cost, you have to record that as a cost of goods sold. And there's no revenue tied to it, which really makes it difficult. Most restaurants try to keep, so for every dollar coming in, most restaurants try to keep food cost between 32 and 37, 38 cents. Now that may sound like a very tiny little range, but if you put some zeros behind a nickel, it starts to add up quickly. And when employees are new, when they're not trained well, when they take the orders improperly, that's when your food costs can go up. When an owner isn't on hand to watch and keep an eye on things, food costs quickly spiral, and that devastates profit margins. So throwing, yeah, you have to, if you bought a loaf of bread and you threw out half of it at the end of the day, you still paid for that full loaf of bread. I hope
Thank
that
you.
helped.
I think it did, absolutely. What's the best process to keep count on tips?
Again, are you, Well, under a point of sale, it's all recorded in there, so that's much more helpful. At the end of the day, if you're a bartender, it's an honesty kind of a thing. Basically, it's you saying, I was given $20 in tips and recording that. I would be honest about it. It's safer in the long run. Right now with the unemployment, I don't even know how they're dealing with people in the service industry to prove what their incomes were if they weren't reporting things.
Thank you. And that was the
But
last
from a tax,
question.
but from a tax standpoint, honestly, that would be a good question for an accountant.
Great, thank you. And that was the last question for this section.
Yeah, and for the car wash, to still at least monitor, aren't you at least counting someone's tracking the number of cars that's going through? Because at the end of the day, if you had 100 cars go through, you'd want to know that you should have, and they were $5 each, that you should have $500 in cash on hand. Even if it's a clicker, just to know the number of cars that went through, to make sure that whoever is taking in the cash, that the cash is actually there. I would create some kind of a system.
Apologies, Lynn, on the car wash question. It was someone who was trying to keep track of that expense. Their business wasn't a car wash. They were getting their car washed, and
Oh,
the
okay.
car wash was only cash only and did not
Oh,
provide a receipt.
interesting. Yeah, as you can see, they'll write a receipt for you. You'd be surprised. A lot of cash businesses will still do a receipt for you. I'd go to the car wash that has, if I was getting my car washed that much, I'd go to one of those ones with the monthly, 1 month of, it's cheaper anyway.
Thank you. And as you can hear, I have a gremlin that just rolled in. But we're done with this section of questions.
Okay,
Sorry, Lynn.
great. Maybe they have good answers to these questions. And after I'm finished with the PowerPoint, I hope you will all stick with me, because I do have some simple spreadsheets that will help track some of these business categories that I'm talking about. And I'd like to spend a few times on those, just to give you a tool if you're not using any kind of a system yet, to see how you can store the information. And then if you are using a system, to make sure that you're categorizing things well. So I hope, once this PowerPoint is done, I hope you all will stick with me. I know this is a long topic, but I hope you will stick with me, because I do have another piece that I want to go into. Back to some definitions. Depreciation. Depreciation is an important expense. It's a tax deduction. It's not money directly out of your pocket. If you go out and buy a $20,000 car, and in a few years it's only worth $15,000, then it's depreciated. No more cash came out of your pocket, but it has lost value. And the IRS does let you take this as a deduction, and it's an important one. So those of you who do have assets, equipment, maybe you own a commercial building, you own not inventory, you own, basically it's equipment and property, computers, cars, vehicles, commercial vehicles. Those are the things that spread the depreciation over its useful life. And it's pretty simple. The straight line is the easiest way for people to go. Take a truck, your accountant will help you figure out its useful life. I used 5 years. The truck costs 20. As a small business, you can actually write that 20 all off in 1 year, or you can spread that deduction over the 5 years evenly at $4,000 each. There's a couple other different methods that you can use, but this is the most easy to understand, most commonly used. A lot of people like to write off everything in the year they purchase it, get it done, get it out of the way, but you could have some lumpy deductions 1 year to the next, depending on how you buy things. I think it's nice to spread it out, but that's a great discussion to have with your accountant. Certain things like buildings have to be spread out, and your accountant could definitely walk you through it, but these are valuable deductions. Basically, anytime you buy something, keep that receipt, keep that title, keep that asset, and then when you're meeting with your accountant, let them know what you purchased during the year, and they create a depreciation schedule, and they'll track it every year for all of the items that you own. So depreciation, don't lose it. I also want to bring up a issue I see with how owners pull money out of a business. I mentioned this early on, that those of you who are not getting a paycheck out of your business, but you actually do a draw, you have to make sure you officially draw that money out of the business. And I don't know if this chart makes it more confusing or easy, but let's start down with the customer here. Gives money to the business for the service or the product, and that money goes into the business account. Oh, I should have labeled this business. So imagine that this says business bank account. Sorry about that. Then the owner officially transfers whatever cash they need for personal bills into the personal account. These two are very separate. Business account over here, personal account over here, and you officially draw it out. You never want to take the customer's cash and put it right into your personal account. That creates confusing situations. If you're a corporation, it will nullify your corporate shield because you're not acting like a business. You're just not acting professional. You're not acting like a business. They will pierce that corporate shield. And it's just much easier to track things. Say you're a business that has a cash register and the cash register said you did 500 in sales, but then when you go to the bank account statement for that day, we don't see the number 500 because, well, part of it went over bank account, part of it went into the personal, and then your account is saying, your daily deposits don't match your cash register. I don't understand. And you're not going to remember 6 months from now that you may have put some of that money in your pocket on your way home. Keep it all official, take the extra steps, and leave a very clear money trail for your accountant to follow, and then for any auditors if you ever were audited. And I always get a lot of questions about travel and entertainment, so I just put up a quick slide. Those of you who will have this deduction, a lot of this is common sense. If people are telling you crazy stories about how they went to Las Vegas for a week and only went to a seminar for an hour and wrote off the whole trip, they're either very foolish or they're lying. It doesn't work that way. You go to Vegas for a conference, you should be at that conference, and they want to see that you attended. So they may ask for agendas, they may ask for that booklet. I know when I go to conferences now, you actually have to put in a conference code to make sure that they know you attended that workshop. And it's all very tracked nowadays. And don't try to cheat on the travel and entertainment. Don't try to write off the whole family's airfare. Don't try to write off the fancy dinners. They check this very carefully. I did mention there's a publication that will go into travel, entertainment, gift, and the car expense. So that will give you detail on how to take those deductions. I believe meals are just 50% of the total cost. They still like those physical receipts. If you get a physical receipt, they like you to write down who you met with and what you talked about. So you say, I met with customer A and we talked about upcoming product launch or something. So just making sure that you keep that. And I mentioned at the very beginning, keeping your date book. If you have a lunch deduction, it's going to be in your date book. And that's just one way for them to track whether you're telling the truth or not, because that can trip people up. They make up these receipts and then they pull out the date book and there's no official business lunch with a Mr. Smith and you think you're trying to write it off. They'll look for those kind of discrepancies. Auditors are pretty good. They know all the tricks of the trade. All right, so before I go to questions, that will be the end of my PowerPoint. And I know we did have a question about the use of car. And the reason I'm so used to doing this presentation live, and I have some more demonstrative ways of talking about it. So I'm going to try to do this verbally and I hope it works. Business use of car is when you're using your personal car for the business. And I know many of you are doing this. How can you track that deduction? Well, there's actually a log that you can keep, and there's a lot of apps that will do this for you now too, that will let you track when you are driving personally and when you are driving for the business. But a lot of it is tied to business use of home. And business use of home is when you designate part of your house as being your place of business and you take a tax deduction for it. That will determine when your mileage actually starts. So if I could draw a picture in your mind of you at your home and you drive out to customer A and you don't have business use of home, then your house to customer A is a commute. It's not deductible. Then when you go from customer A to customer B, those are considered business miles. So when you work from home and you don't have business use of home, going out and coming home, first trip out, last trip home is just like driving to a place of a place of employment. It's a commute. First trip out, last trip home are a commute. Doesn't matter if the mileage varies, it's always first trip out, last trip home are a commute. That can reduce the amount of mileage you're able to deduct depending on how often you drive, what kind of routes you drive, how far away your customers are. It's going to vary so much with all of you. So if you do want to use your car for business, that's something to learn a little bit more about. That publication that I mentioned, 463, does go into a lot of detail. It also talks about the two methodologies. The one method is to do mileage, and I think it's, I don't know, 55, 56, whatever cents it is a mile now. You track all those business miles, and then you're going to multiply it by the 55 cents, and that will be your deduction. And the key is to having that log that can back up those trips. And that's again where your date book really comes in handy. I know my Outlook calendar has every single meeting that I have to drive to, and then I can always cross match back to what the mileage was using Google or whatever mapping you use to check the mileage. But it's all in my date book. It is who I met with, what their address is, and usually what we're meeting about. And so it's great backup, and it helps me do my log to make sure that I'm doing the mileage correctly. If you do take the deduction for business use of home, and there's very specific rules on who is eligible for that, then every trip is a business mile. So it's worth having that conversation with your accountant. Am I eligible for business use of home? What are the rules? And will that help me increase the amount of mileage I can deduct? And then you either take that mileage as that standard 56 cents, 57 cents, whatever, or you do the long way, which is count every repair, count all the gas, count all the mileage, divvy it up between personal. Most people don't like going that route unless they have a very expensive vehicle with a lot of depreciation or a vehicle that gets terrible mileage. So I wish I had a slide to better depict that, but I hope that was helpful. Business use of car, it is doable, but it does require some record keeping, and you'll want to learn a little bit more about that if you're going to go that route. All right. I hope that answered the person's questions they had about the car, and then any other questions.
Thank you, Lynn. One quick one following up the mileage. Could you use this for a rental vehicle?
Yes, you can, and then you can either just do the mileage or then talk to your accountant, depending on what the lease is like. The tough thing about if you have a leased vehicle is if you're putting all these business miles on it, will you go over your lease agreement? That will be a whole different personal financial question that you want to answer. But tracking the mileage, whether you own the car or lease the car, should be the same if you go the flat fee per mile. If you want to go the longer route, gas repairs, then you'll have to talk to your accountant about how that lease. I'm not as informed on that part of it. Any other questions for that section?
There's one related. So if someone's working out of a client, or sorry, let me start again. They're working at a client's house midday. Can they write off 50% of their lunch that day?
Oh boy, you're asking specific tax questions. See, now that's where it gets into, don't you have to eat the lunch anyway? I think that might be a tough one. Now, if you sat down and you bought the customer lunch and you discussed the project over lunch, that might make a little more sense. But yeah, just to say, well, I'm eating here, so I want to write off half. I honestly, would you feel comfortable telling a tax auditor that? I guess that's always a good way to think about things. But I can't give you a specific answer on that one.
Okay, thank you. This is one unrelated to this section on the disaster loans. Did you want to jump into that?
Yeah, let's take a few disaster. I want to make sure I get to those spreadsheets because I didn't spend a lot of time on sales tax because I think that's better demonstrated in the spreadsheets. And the few people that we did have with sales tax, I want to make sure they're aware of it. But yeah, I'll take a couple disaster ones.
Oh, we can definitely save them to the end. And we did have a couple follow-up. What if it's lunch between clients and someone else is very excited to hear about sales tax?
Okay, good. I think sales tax is very important, so I'm glad somebody's excited about it.
Yes, and I'm sorry, did you answer the question on lunch between clients?
If it's a lunch between clients, it seems like it would be deductible. Again, it's in your date book. It's an official lunch. Keep track of what you talked about. It's got to be your comfort level. Some people don't want to take those kind of deductions because they think it'll red flag them. IRS claims they don't red flag people for taking car deductions and entertainment deductions. But if I was an auditor, those would be the things I would probably look at more closely because it is easy for people to slide things in there. But if I ask for your date book and I see specifically that you were meeting with clients and you even have an agenda or an order was placed, that's just good CRM for tracking your customer activity, and that backs up the deduction. So everything ties together when it makes sense.
Thank you. This person wants to know what you meant about, quote, ask about business use of home, end quote. Are there rules to work out of the home?
Yes, and that's a great question. So basically, the space that you're using must be used regularly and exclusively. The regularly part is pretty good. Like right now, I'm working from home and I'm in my dining room. I can't take business use for this because this is my dining room and I use it as a dining room. So it will not pass the exclusive mark. But if you have a office that is no one ever goes in there to watch TV or take a nap, it's got to be just for the business. And they look at that very, very carefully. Then there might be a slight deduction that you can take for utilities, insurance, and so on. I don't think most people do it because they're going to get a huge deduction for business use of home. They may do it just because it does improve the number of miles. So if you're not using a very big space in your house and you never drive for business purposes, it may not be worth going for the deduction. That's a great question to ask your accountant. Is it worth it? I use this spare room. I use it for nothing else but the business. I use part of my basement to store inventory. Nothing else goes in there. Then it's worth having a conversation with the accountant as to whether it's worth it or not.
Great. That's the last question for this section.
Okay, great. Now this is where we're going to see if I can do this. Make sure I open the right accounts. Bear with me for a minute.
I also appreciate everyone understanding that I'm working from home and then it's bedtime and my daughter is running around. So,
And if you want to go for a few minutes, we'll skip the questions for a few minutes so Renee can get.
no, we're good. She's under control. She was just very excited for a few minutes there. So, but your spreadsheet is up and it looks good.
Yeah, I think of the experience that we're all having now working from home. I think it's been a lot of fun to get to see people's houses and their experiences. So I hope everybody is okay with that. Okay,
Thank
I
you.
have two spreadsheets up on the screen. I have this is a very simple, many of you are probably already outgrown something quite as basic as this spreadsheet. But even if you have outgrown it, you are on a QuickBooks or whatever system, the idea of just categorizing the information is important. So here's a simple cash receipts journal, and we're talking about money coming in and money going out. And I know I don't need to have you raise your hand to have you tell me which is more fun, money coming in or money going out. So let's start with money coming in, cash receipts. This is kind of set up more like a checkbook, so you can actually put in a date, and you can put in daily cash register, and I hope everyone can see this. Renee, are you seeing?
I am.
Okay, great. If you can separate out any information at all, one of the easiest things would be to make sure that you're tracking sales tax. Now, those of you who collect sales tax, this is not money out of your pocket. This is money out of your customer pocket. And you've been given a tremendous responsibility. You have been asked to collect money on behalf of the state of New York. And you better believe that the state of New York takes that pretty seriously. So if you hear about a business being shut down because they couldn't pay their sales tax, do not feel sorry for them. They took money given to them by their customer and they spent it in a way they shouldn't have. That money was supposed to go to the state. That's why very early on when I talked about bank accounts, I recommended a separate account for the sales tax. You don't want to accidentally spend any of that. And then you get to the end of the filing quarter and they're asking you for that. And you're like, oh, I'm sorry, I spent that money. State will, no one can shut you down faster than the New York State Sales Department when you don't pay your sales tax. And the fines and the fees are so heavy, it's very hard to get out from under. And those of you who are not collecting sales tax, you can thank your lucky stars, but you should also verify that you should be collecting sales tax. Sometimes people who have a service assume that, well, services aren't taxable. Many services in New York State are taxable. If you change tangible physical property, you come over and paint my living room, that's a taxable service. If it's a repair, it's a taxable service. So do clarify with the state of New York whether or not you should be collecting sales tax. It's very, very important to make sure. And if you add a service or you add a product, verify it again. I've been told that, say, charter fishing isn't taxable, but if you serve lunch, all of a sudden the whole thing may be taxable. So it gets kind of complicated. Selling a loaf of bread, not taxable. Selling peanut butter, not taxable. But you make a sandwich with that bread and with that peanut butter, you now have a sandwich that is taxable. So be careful with that. Always verify whether or not you should be collecting sales tax. So we're going to assume this is a business that collects sales tax. And today they had $100 in sales. And I have this set at 8%. So it automatically, just for demonstration purposes, it automatically showed that in the cash register today, they should have had $108 because they sold $100 worth of items and they had $8 in sales tax. And every day as we go through what the sales are, the business is also putting in that sales tax and knows at any given time, this number down here is what they owe in sales tax. Not to accidentally spend that in any way, shape, or form. And this number can start to get big. Here's just 3 days worth of some small sales and we're already up to 40 bucks. Think about your business, think about your volume. Some of you may be holding on to some large sums and then you send it in quarterly. At the very minimum, your record keeping should be able to figure out what your sales tax is. All right. And you'll notice that over here is the full amount going into the bank account. So this is the deposit being made, and then this is how the money should be categorized. That's a real simple scenario. Let's say we're a bakery shop and we sell through our bakery to consumers, and we have cookies and things that are taxable, so that's going through with the sales tax. But we also have some restaurant accounts. So on the 8th, we sold some pies to a restaurant. A lot of restaurants don't make their own desserts. And we sold $300 worth of pie. It's good to have a separate category for the wholesale sales, because then we know that those sales are not subject to sales tax. If the New York State Tax Department comes into your business and says, well, how much sales tax did you collect? They're going to look at these receipts. And if they see $400 here at this total, and they only see $8 in sales tax, they're going to wonder why. And you can easily say, I have $300 in wholesale accounts. And then you can also have on hand any resale certificates you may be required. The business can give you that resale certificate showing that they sold your product and collected tax when they sold it. So I hope that makes sense. This is where it's a little harder to teach this class on a webinar, because when I'm seeing you in person, I can see your faces and I can tell if your eyes have glazed over and you're too tired at this point, or if this is making sense. But just from tracking for New York State, you'll want to know retail wholesale. You'll also want to know if you're dealing with different counties. I have a business who has a delivery, and when she delivers to customers in Niagara County, she charges the Niagara County rate. When she delivers to Erie County, she charges the Erie County rate. So she would need to have at least 2 retail categories, one for Niagara, one for Erie, and then be tracking the amount of sales for each. Now, you don't have to send the sales tax to the counties. You're going to send one check to the state, and your records, when you see what the form looks like, it will say, okay, what counties? And you will break it out as to how much was for each county. So they're going to want you to track the gross sales and the revenues you collected per county. Those of you who are selling online, it's point of delivery. So if you ship it to Nassau County, you're going to have to know what that rate is, and there is a publication on the sales tax website. You're going to know that rate, and you're going to charge them that rate. If you send it out of state, you're not at this point collecting sales tax. I think that will be changing. More and more states are trying to figure out how to get out of interstate sales tax, but right now focus on where it's being delivered in New York State and what tax you should collect. So it's point of sale. If they come into your store and they buy it in your store, it's whatever county your store is in. I hope that is clear.
Thank you, Lynn. What was the website again for folks to check if their services are taxable and what that sales tax will be?
Go on New York State, New York. Oh, I have some resources back to that PowerPoint. I failed to point out after my questions, I had some additional resources. It's just too in-depth to go through, but and when you get the PowerPoint, you will see that I have the New York State tax timetables, so you know when the filings are. I have information about 1099 miscellaneous, 1099K, some stuff on employer obligation. This will all be in your slides. And do I have New York State? Okay. I did have it way back. New York State Tax Department, so www.tax.ny.gov.
Great, thank you. Are you able to provide a copy of the spreadsheet you just went through?
I can include it. It's pretty bare bones and basic, but I can include it if people would find that helpful. Oops, how do I get back to my? Okay. I mean, you're welcome to this. I can send it to Renee as well. It's just a pretty basic sheet, and you can change these categories to whatever you need them to be. It's not a bad way to get started, at least getting used to tracking the information. This is money coming in. Some of you may be charging some shipping and handling. You'll want to keep that separate. So if the item cost $100 and you did charge sales tax because it was a New York customer and you charged another $10, then you're actually depositing $119. It is nice to know what was the sale, what's the sales tax, and what's the shipping and handling. And if you do use this spreadsheet, I am at an 8%. You'll definitely want to change the formula to whatever tax rate it is in your area. I have columns here for gift cards. Gift cards are a great way to bring in customers. People buy gift cards for the holidays, birthdays, they give them out. The customer comes in, tries out your business. Hopefully they become a long-term customer. If you notice, there's a word here, liability. When people give you money for those gift cards, you need to track how much. Say it's Christmas, and all of a sudden you're selling you're selling all these gift cards. Woohoo! Look at all these gift cards. $410 in gift cards. Man, we're going to have a great Christmas. You spend all that money, and then in January, these cards start coming in the door, and people are buying your products and services. You need to replenish stock. There's no new cash coming in here because this money was received previously. I hope that makes sense. And this is similar for those of you in the industry, especially in the wedding industry, where you're getting deposits. Think, instead of the word gift card, think about deposits. Somebody gives you $100 to reserve your photography services for a wedding in June. You have created a liability. If you cancel out on that contract, you have to give that money back. So track money coming into the right category. Track those gift cards, track those deposits. Make sure you are aware of the obligations that you are creating, because when those gift cards start coming in the door, you're selling things, but you're not necessarily getting more cash in unless they spend over and above what that gift card is. So I hope that part makes sense. I have a column here for cash received on account. That will be for those of you who are, this system that I have here works best for cash basis. It really is a cash basis spreadsheet. But when we get into things like selling gift cards, we're already outgrowing this cash basis worksheet because we're now creating liabilities. If you're receiving cash on account, you're probably already outgrowing this worksheet. This is when customers are paying you for when they've been billed. So this worksheet is a good way to get started. It is more designed for people on cash basis. I do have the columns for gift cards and receipts. I do have over here. I have the receipts for your down payments. But do start thinking a little more seriously if you're using those columns about how can I use a system that might be a little more sophisticated. Let me clear out some of this. All right. You'll notice that I have a non-revenue investment. I mentioned earlier that when money goes into your account, you need to identify it when it's not an investment. Otherwise, the tax department could assume that that's a revenue. So let's say this is the first day of your business and you, the owner, are investing money in your business. You're going to want to have that column where you show that this is $5,000 of your personal money that you just invested in the business. Clearly identified so that if an auditor were to see that, they would know that that was an investment and not a revenue. And then they'd have the corresponding personal bank statement that shows that on that same day you took it out of your bank statement. And they will trace this back. Not going to just take your word for it. They're going to say, okay, that's a personal investment. Where'd it come from? Show me those statements. You can't pull anything over on them, nor should you want to. All right, so that's money coming in. Before I move on to money going out, does anybody have any questions on something special about the money, kind of money that they see coming into their business?
We had a comment that bare bones and basic is a beautiful place to start for the spreadsheet.
I think so. I think so. It gets you started. If you try to jump into something so complicated, you will never keep it up. It's like trying to change your entire diet overnight when sometimes it's easier to just change one food item at a time, get into a new habit, and go tackle the next one. Yes, I love that.
Thank you. This person owns a video production company. They service video marketing. Should we / how do we place sales tax on our services, being that we don't sell anything physical?
Oh boy. I'll use photography as an example. I tried to read a sales tax bulletin. I told you I'm not an accountant. There's a sales tax bulletin on photography, and it made my head spin because there's so many different versions. In the old days, you took the photo and you handed somebody a physical photo, you charged sales tax. It was a physical item. Now it's digital, but they make a comparison between how that digital is used and if it's used in a commercial document or commercial publication versus, and I just started reading through this stuff going, oh my gosh, how do you figure that out? So I hate to tell you, but depending on if everything is virtual, still don't assume there's not sales tax involved if you're doing something that's commercial. I would call the sales tax department.
Great, that was the last question.
Oh, great. Everybody's got tons of money coming in, so that's awesome. Before I go though, I did want to say, I always say that this is for decision-making purposes as well. So these are going to be cash register, daily receipts coming in. Let's get rid of some of this stuff I had on here. And again, back to my bakery, and I have retail customers and I have wholesale customers. And a lot of people do a blend because it gives you a little more ability to deal with maybe seasonality. Maybe retail has stronger seasonal sales, whereas wholesale has more steady sales. It's a great way to get a little more predictability into your life by having more than one revenue stream. And let's look at how their daily sales are going. Look how easy it is to make money. See, you just put in numbers and that's how you make money, right? Okay, so this is how their week is going. Which side of the business seems to be taking off more strongly? Retail or the wholesale? Obviously, it's the retail. And when you break out the cash register receipts, you can see that. If it's just one big deposit going into the bank account every day, you can't tell which is doing better. And maybe you like the retail side, you love dealing with the customers, you've got a higher profit margin, you've been marketing heavily, you're very excited to see this increase in the retail sales. Maybe you're okay with the wholesale dropping. It's been difficult. The margins aren't there. Restaurants want the bakery goods for way too cheap. You're not real disappointed that it's falling off. This is backing up what you're thinking. However, if you are very upset that your wholesale is backing off because you just hired a sales agent who's supposed to be generating wholesale sales, and these are the results you're getting, then you know you're tracking real quickly that that agent isn't doing what you wanted them to do. You want the wholesale, you like the predictability, you don't mind the smaller profit margin because it is a guaranteed sale every day. But you can't make these kind of decisions if you're not seeing the information. How can you tell if your marketing is taking off? How can you tell what are your most profitable items? How can you tell what are the best days of the week, days of the month? Just think of the patterns that you can see, especially if you get into something a little more sophisticated like a point of sale software. You'll know, not just by your gut, that Thursday's a great night for you, and Tuesdays have picked up since you started Taco Tuesdays. You can see that when the numbers back it up. Otherwise, you're just kind of going with your gut and kind of, well, the phone's ringing, I guess I must be doing better. This is backing it up with hard numbers because you made a few categories. Now, don't make 10 categories here. You'll drive yourself nuts trying to isolate all that information. But if there is some good decision making you can make by just figuring out a couple of your revenue streams and tracking them, and then comparing them back to your marketing activities, I think you can learn a lot. All right, money going out. Not as fun to talk about and pretty straightforward. Those of you who still, you put in the date, always track everything by date. If you're still using a checkbook, put in the check number, utilities, pretty basic stuff. And then you can go over and categorize it. I have some basic titles. You can change these out as needed. You can match these to a Schedule C. If you've ever seen a Schedule C, that's typically what a DBA uses. These are the kind of expenses that you're allowed to deduct. They'll change for each of your business. You'll notice I have the shipping and handling here. I had shipping and handling on the money coming in because your customer gave you money for shipping. And now I have the money going over here where you actually paid for the shipping. And since a lot of people round that up, it's always good to compare those columns to make sure, because a lot of people don't want to deal with whether it's California versus Maine versus Florida. They'll charge a set shipping and handling to the customer, and then they come over here and they see what the actual shipping and handling was. You can compare those columns and make sure you're at least breaking even there. Sometimes people want to make a profit on their shipping and handling. That depends on your business model and what works for you, but at least make sure that you're breaking even. And this is becoming a real struggle as more and more customers expect free shipping. So some of you may not have any money coming in on that cash receipt side for free shipping, or you make them wait till they at least spend 50 bucks for it. But you can clearly see what the shipping expense is, and you can kind of figure out, boy, am I charging enough for this product to cover the fact that I'm giving up all this free shipping? And those of you who are trying to sell as an Amazon Prime customer, that's becoming more and more difficult for small businesses to absorb that shipping. I have a column for owner draw. Get rid of this one. Here's your owner draw. That's for those of you who do pull cash out of the business. Remember, I said to show clearly a transaction where you are pulling money out of the business and then putting it into your personal account. Have a category totaling up those draws. I mentioned accounts payable way early in this evening. You were probably much more awake. But I mentioned accounts payable. That's when your vendors will ship you products while they wait for payment. This is where you would show those payments. This is again getting you into the accrual method. If you're using this column, you're probably already outgrowing this spreadsheet. And then my favorite column, ask the accountant. Hopefully, I've said it many, many times already that you are seeing your accountant at least once a quarter. You think about something that you did in January and then you're talking to your accountant in April, will you remember that? And that could be where those items are that you just aren't sure about. So you bought lunch for clients. Oh, I can't spell. And you're not sure if that's deductible or how to do it. I obviously can't spell. Excuse my spelling there. Put that item over here and you'll know to have a conversation on that. It will just pull it out. Try not to have 500 items of all the, everything in here. Try to do your best. And many accountants, those of you who are startups, many accountants will help you get your QuickBooks set up because they want that information to be accurate from the get-go. It's a lot easier for them. Getting these categories corrected from the beginning is very important. Try not to put too many things over here, but this is you bought equipment and it's a large item. You put it over here and you won't forget, oh yeah, that was that new machine I bought. Let's talk about it. You'll pull out that receipt and you can talk about how to deduct it. It's always great to have some kind of default as to what are items I'm not too sure about. You notice I do have a miscellaneous column in here. You don't want to have 90% of your expenses in that miscellaneous column. That's going to make the if you talk about red flagging your tax audit, your tax return, I think the IRS is going to look very heavily if everything is under miscellaneous. So try to use that one sparingly and try to use the actual accurate categories. All right, so that is money going out. It's 8 o'clock, and I'm sure some of you are probably getting pretty brain dead at this point. I will, when I go into the financial statements on the 29th, I will do a little review on the accounting side of it, talk heavily about the statements and cash flow, get into that in a little more depth, and I'll definitely be doing some break-even analysis on the 29th, which is really important no matter what stage of business you're at. So money coming in, we didn't have too many questions. What about money coming out, going out? Any questions there?
Yep, we had a quick one. So if this person did a lot of client meals, would you add a new category for that, or would you put it under miscellaneous?
If you do a lot of client meals, then I would make a category definitely for clients. Just make it client meals and then have all those receipts handy, because yeah, that's one you're going to want to spend a little time with to make sure you're doing that all accurately. But if it's just one or two and you're not too sure, yeah, put it over, ask the accountant and just clarify it.
Okay. What is the difference between owner draw and paying a salary to yourself?
Well, it's going to depend on your structure. Usually a sole proprietor fills out a Schedule C, revenues, expenses, and then the net income is added to the family income. And you don't pay yourself a paycheck. You pull out with a draw. And that's something, I'm glad you asked that, because, how do I get back to you? Okay. Where am I? That's where it gets to be very important that you understand. Okay, let's go back to this one here where I had the two examples versus cash versus accrual basis. And we had two very different net incomes. You as the owner have direct control of your own checkbook. You have to be very careful that when you pull draws out of your business, that you not only understand where you are on a net income basis, but where you are on a cash flow basis. When you pull cash out and forget that you owe the FICA money that needs to go in, or you've got a big insurance bill coming. It's just like your personal expenses. You go spend all of your money in your checkbook, forgetting that your car payment is due in 2 weeks. You have a huge responsibility to keep a good eye on your cash balance. And if you are incorporated and you have a set payroll and you're part of that payroll, you probably have a little more predictability. But when you're pulling out draws, you may not have that same predictability, and you're going to have to be very careful with your cash flow so that you don't pull out more cash than you can actually safely do. I hope that makes sense. But it is pulled out as a draw. You literally, whether you're writing yourself a check from your business checkbook to your personal. I know my father ran his own business, and he would write a check to himself, and he would then deposit it in his personal account, and that was his draw. But what you're going to pay taxes on is your Schedule C, your net income.
Thank you. A follow-up to that. Under a business, can you use personal checks?
No. Pay all your bills with a business. Pay all of your business bills through your business. Pay all of your personal bills through your personal. Keep them totally separate. Totally.
Thank you.
If you learn nothing else from this class tonight.
Thank you. To step back one topic, what if you charge sales tax and find out later that you should not have been charging it?
Oh boy, that's a great question. I've never had that one. Sheesh. I would refund them the money. I would talk to my accountant first, but boy, for the sake of honesty, and that if you have only a few customers that happened on that, probably be pretty easy. But if you've been running a business for years, oh my goodness. I would worry about that looking fraudulent, actually. So I would talk to the accountant right away on how to rectify that.
Okay.
Not to scare somebody. Not to. I don't mean to. But just talk to your accountant right away.
Okay. Can you treat yourself as a vendor to pay business bills if you don't have a business credit card?
Treat yourself as a vendor. I not being a CPA, I still the part of me where that goes, oh, that sounds funny, says, why don't you just transfer business money to your personal account and call it a draw? Yeah, I don't want to touch that one. Sorry.
Nope, that's fine. So to separate, just to clarify, the business and the personal stuff, they would have to go to the bank and open up a business account to be able to have those business checks. And is that the correct process there?
Yeah, go to your bank, and as I said really early on, you can also do a credit union. A lot of credit unions do business accounts, and they may be a little bit cheaper. Check the fees, because sometimes some banks, they want major deposits before you get free checking, and the checking, the rates are higher. You don't have to still have a checkbook. You can still pay your bills electronically, but the business expenses should be coming out of the business account, and the personal stuff should be coming out of the personal, and keep those very, very separate.
Great. And we had to mention that some banks like Cornerstone do business accounts for free.
Oh, do they? That's good to know. Yeah, people forget about their credit unions. Credit unions are awesome. My first job was at a credit union. I love credit unions.
Very cool. We have, right now, we just have that last question on the disaster loan. I don't see any other ones that have come
Okay,
in.
great. Let's
So you let me know when you want that one.
Yep, go ahead.
Okay. Okay, this is a question about paying contract labor. They have an artistic contractor for seasonal work. I have records of yearly spending on labor. Will this affect my ability to receive a disaster loan?
Okay, so if I'm not sure if I'm hearing this right. The disaster loans are to cover business expenses. They don't typically include 1099 employees in the forgivable piece. So I guess it would depend on which loan you're going for, the EIDL or the PPP. And if you're going for the PPP and you want to determine your payroll, the piece, the payroll piece, so that you can go for the forgivable part of the loan, then the payroll can't include 1099. I'm not sure if that's what they were asking.
Yeah, I
Can you read
apologize.
that
I
one
can't
again?
ask a follow-up because they had to scoot. But maybe we
Could
can
you?
reach out to them
Oh, I'm
later.
sorry they had to go. That's too bad. Definitely, those of you who are in business and can't decide, do I do the EIDL? Do I do the PPP? Talk to an SBDC near you. Give us a call. We will try to walk you through the process. I have to honestly tell you, they keep clarifying things and clarifying things. And every time we think we have it figured out, new sets of rules come out. It's not an easy process. They are going to probably want some accounting. They're trying to push the applications through pretty quickly right now, but I think down the road you will be asked for record keeping. You will be asked for proof of how you spent the money in order to go for the piece of the, the PPP has a forgivable piece to it. To get that, you're going to have to prove. That's where record keeping just comes more and more important. And when the SBA is determining how much they're going to lend you, they're going to look at your records. So if you have if your tax returns for 2019 are done, that's great. If your payroll maybe has changed since the first of the year, you'll be able to verify that with your payroll records. Everything that you want to ask for from the SBA, they're going to say, okay, show me the records. And you've got to be able to pull those out. They've got to be accurate. And if there's nothing we're going to learn from this, is having good, accurate records and that emergency fund are key.
Thank you. We have a few more on the PPP and the EIDL. If for some reason I missed your question, I just want to mention, or we don't get to it, definitely follow up. I put Lynn's email and their website in the chat box, and I also put in the link to all of the centers. So if you're not in Lynn's area and you have questions that are either more specific or if I miss them, definitely follow up with us that way.
Yeah, it's just nysbdc.org is the state. There's a map. You can locate someone near you. And it really is good to work with a local advisor because they're going to have local resources and know about local programs.
Thank you. On the disaster loan, what if they just opened a few months ago? Do they qualify?
The SBA keeps saying, hey, just go ahead and apply, and then we'll tell you yes or no. I think the date that I see a lot is February 15th. So if they were officially open before February 15th, they have lease payments, they may be owing utilities, they're shut down. I think they should apply. The worst that will happen, there's no application fee, there's no obligation. The SBA can come back and say, no, you don't qualify. Or the SBA may come back and say, yes, you do, and here's the amount that you qualify for. You don't know if you don't ask. And so I guess the timing of that, when you say fairly new, you will need to come up with at least, since you might not have 2019 returns, or the 2019 returns may only represent a couple months because you opened late in the year, being able to back up your expenses going forward will be important.
Yes, and they just commented they officially open in December and they run an online retail shop.
Okay. Well, at least you don't have too much overhead, but you might still have some expenses that web hosting and maybe some other contracts that you're involved with that you can't get out of when you're not doing business. It's those fixed costs. And I will talk more next time about fixed versus variable, but it is the fixed cost. It's the overhead costs that the loans are designed to help you with. They're not meant to replace revenues.
Thank you. For a Schedule C self-employed going for the PPP, how do they depict their payroll?
Oh gosh, we're still waiting for clarification on that one. We're being told that's coming very soon and that you will qualify, but we just don't know yet, sorry.
Thank you. Also, on our website, the nysbdc.org that you mentioned, we are compiling a list of FAQs and resources. So when the stuff does come out, we are trying to get it up there. And also sba.org will probably update quicker than we do, I suspect on that. Lynn, you could comment otherwise.
Well, and I have to say,
Resources.
our website vets everything. Our research library looks very careful before they post anything. You have to, there's so much misinformation, articles, and even some scams out there. So Renee said our website and SBA.gov, those are the safe sites to be on.
Thank you, and thank you for clarifying. I think I said .org, so sba.gov. Thank you.
Yeah, the SBA.gov, and then we are nysbdc.org.
Thank you. And I'll put those into in the chat in a second.
And I'm, yeah, and I'm somewhere in here, there's that stuff. Any other questions?
Yeah. So let me see if I can get this as a two-part one. What about disaster loans where they don't have any business loans now and therefore have no established relationships with SBA lenders? Can they do both PPP and the EIDL?
The EIDL is directly through the SBA, so that's a nice, easy one for people to start with. You can always decline it if you find that the PPP is better for you. PPP does make it a little more difficult. Banks are working with their own customers first. We should be hearing soon about a bank that Pursuit used to be in New York, NYBDC. They should be launching pretty soon, and they typically can help those without a bank. They're a safe resource because they are a not-for-profit certified lender in the state. You have to be very, I've had a couple people go out of state and get some lenders. I'm kind of nervous that they went that route. I think it's a little risky. Try to go with what you know. But as soon as we know more about Pursuit lending and who they can help, we will definitely put their information on our Facebook page. Some of the credit unions are jumping into it too. Again, back to that credit union.
Thank you. This person filled out the quick application online, and I apologize, I'm not sure which one it was. I suspect EIDL, maybe. Would they be contacted by email? They think the process began April 10th.
A couple weeks ago, we were told you'd get a robocall, you'd get an email. I don't think they just imagined the sheer volume. And I have clients that applied weeks ago and still not heard anything yet. You can call the 1-800 number. I don't know how easy it is to get through or how long it takes. And I don't have that number right in front of me right now. But patience is key. The EIDL system is just very, very overwhelmed.
Absolutely, and I'll see if I can pull up that number and their email.
Yeah,
And
there's a disaster. Yeah, I'd have to pull up my whole email, and I don't want everybody. I probably would then show you all my emails, and I don't want to do that.
Well, we just don't want to be discouraged by the overwhelming amount of your emails.
Yeah, no, unless you want to answer some of them for me, please.
Yeah, let me see if I can pull that up. But yes, they did confirm it was EIDL. And I think you answered this, but just to clarify, you can apply to both PPP and the emergency loan, but correct me if I'm wrong, you just can't use the funds to pay off the same things.
Right, no double dipping. Yeah, it's very important. There's no double dipping going on. And those sole proprietors that are collecting unemployment have to make sure that if we do find out what the new rules are for the self-employed going for the PPP, to make sure that when you start the PPP, you have ended the unemployment, or when you have started to have revenues come in because you start having work trickling in as we get back to normal. Make sure you stop that unemployment. Be very, very careful that there's no double dipping going on. And there's going to be rules on the forgivability. So if you get the advance And the advance is based on employment. The advance is supposed to, the EIDL advance is supposed to be used for payroll. Whatever part of that is forgiven will be netted out of the forgiveness side of the PPP. It's not an easy process. You just try to take it one step at a time. And those businesses that are working closely with their accountants, I think, are in a little better shape. Obviously, if you're working with the SBDC, we're trying the best we can to also help you make sure that you're just separating out how that money is spent, recording separately.
Thank you. This question comes from a virtual consultant. Their products are mailed out. Is sales tax still dependent on where that person receiving the product is?
Far as I know, it always is based on point of destination. That brings up a good point, though, because it depends on how you're paying for something. If I'm a speaker at an event and I charge you a flat rate to come to my event and give you my book for free, then I'm not collecting sales tax. But if I have a free event and then charge you for my book, I'm charging sales tax. At least in New York State, every state is a little different, but that just shows you how the methodology of how things transact make a difference.
Great. I don't see any other questions right now. Lynn, did you have any other comments while we wait to see if there's any other ones?
I just want to thank everyone. You've been a wonderful group. I want to mention that next week is marketing. Now this will be I know you had social media, but this will be looking at the overall market strategy. And when she gets into the pricing, think back to what we've talked about tonight as to what other expenses, what costs do you have that this price has to cover, the price that you're going to charge, making sure that it will cover the expenses so that you get to the point, and in a few weeks we'll talk about break even, but getting to the break even point and then getting past that so that you are actually making a profit and then to the point where you are making a living. So that's really important. I'm looking at my notes to make sure there's nothing I missed.
Thank you. And there's lots of thank yous rolling in, and this has been very helpful and
I miss
informative.
seeing all of your faces, but it's fun just knowing that you're out there, you're asking wonderful questions. We hope that when things get back to normal, we can have great conversations with all of you on normal business things. I can't wait to get back to talking about normal business things. But the challenge is here for all of us, and the better you prepare, the better you'll get through this. So thank you, everyone. Don't miss marketing coming up. Then we have HR coming up, and then we will have finance again on the 29th.
Absolutely. Thank you so much, Lynn. Lots of thank yous. And I definitely look forward to listening and talking to everyone next week, not seeing. Now you got me in the wanting to see people mode, Lynn. Thank you.
I'm missing people. Well, thank you, everyone.
Absolutely.
And please, I know the process is a little clunky that you have to register for each class, but we do appreciate that very much. We hope you will join us. We hope you will share this information. And then I will get the PDF of the PowerPoint to Renee in the next day or two, and we will get that out to everyone. And I will send the spreadsheets as well.
Absolutely. Well, thank you so much, Lynn. Lots more thank yous rolling in. And if anybody has any trouble registering for the upcoming classes, just reply to your registration email from the one today.